Is the US versus China trade war escalating and more tariffs finally causing a bear market in US stocks? So, better late than never. I was supposed to have done an interview Friday in the afternoon or early evening, and unfortunately, it had to get rescheduled at the last minute. It's too bad. It was going to be really good. It was a first-time guest. I won't say who it was, but it was going to be really, really good, and I will work on getting that rescheduled as soon as possible. So I'm going to step in here and provide you guys with a full show for the weekend. There is a lot to talk about. So China retaliated with, this was expected, no surprises here. China retaliated with an increase in tariffs on U.S. imports of about $60 billion targeted list. And let's see here. They're applying an additional 20 to 25% tariffs on more than half of 5,140 U.S. products that are being targeted. And Beijing had previously imposed additional rates of 5% or 10% on the targeted goods. So the talking heads on mainstream financial media, the people running large, major multinational U.S. corporations, they don't like tariffs. They don't like trade war. So your Gerald Celentes and other people saying this trade war is fake, this trade war is bankster propaganda, I can tell you that the bankers do not want this stuff. Okay, they don't want tariffs and trade wars. That means no extra commissions on the garbage that they're selling, a lot of the financial products that they're selling. And I could definitely tell you corporate CEOs do not want a trade war because that's going to hurt their earnings. It's going to cause higher costs in the value chain. There's a lot of people that don't want a trade war and tariffs. Okay? So the people out there who are saying there is no trade war, there's never been a trade war, it's fake, this is a front, I totally disagree with them. So they're probably the same people who believe in the QAnon stuff, even though the QAnon stuff saying that Jeff Sessions was doing a good job and running interference and that the U.S. state attorney in Utah was really doing his good job. The documents have just come out that he was totally inept and stupid and was not doing his job at all. Okay? So just because there's rumors of it does not make it true. There's a lot of people on Wall Street. You can see it in the people on the mainstream financial media, on CNBC. They don't want to have to talk about a trade war. They don't want to have to talk about tariffs because that means the stock market is not going to keep going up. They're not going to be able to pump things as easily. So let me talk about now the tariffs on Mexico. I've had multiple podcast listeners reach out to me and ask about that, ask me my opinion. I think this is a leverage move by Trump. He doesn't care about the economics of the tariffs on Mexico. This is about the illegal immigration migrant caravans at the southern border. Mexico will not help. So let me tell you what I've heard from sources. One of my sources lives in the U.S., but he has a lot of family in Latin America. He's originally from there. He escaped Venezuela, and he still has family all over Latin America. And he told me this. Iran is involved with, besides George Soros, besides these NGOs, which are non-governmental organizations, they're quasi-funded. If you've lived in the Washington, D.C. metro area, you know what I'm talking about. There's a bunch of stuck up, really brainwashed, hardcore Democrat, hardcore feminist, champagne socialist women, a lot of them are lawyers too, and multiple degrees, who work for these types of companies. And so what has been happening, and this is unfortunately, this is out of the mainstream media news cycle. Fox News isn't even covering this anymore, is that these migrant caravans that are coming through have not stopped, and funding has actually increased. There's been even more of them. And this is why you're seeing record crossings at the southern border. Well, my source said that Iran is involved funding these down in Latin America. So in countries like El Salvador and Guatemala. And the U.S. is aware of this, and the U.S. is really angry with Iran. So not only is it George Soros who's doing this, and, these globalist, hardcore Democrats who are involved, who are actually flying down there and telling people how to lie, cheat, and get across. Coaching them, giving them money, all these things to move. And this is why we have record crossings. So back to Trump and putting these tariffs on Mexico. Trump is trying to leverage the tariffs to get the Mexican government to do something at their own borders to stop this. And he's hoping that this will work out. It might not work out at all. It could backfire really bad. But there are a lot of entities that are either globalist or socialist or hate the United States that are actually directly funding a lot of the migrants that are coming up here from all these poor Latin American countries. So that's what my sources are saying to me that I've talked to. They brought me some of this information. And it is a big, big problem. The mainstream financial media, the mainstream media is out of the news cycle. Fox News covered this a lot 6-8 months ago, right? Remember? And then it just fell off the radar. But you see these news stories occasionally, there's even more migrant caravans coming. And the Democrats in Congress, and back to Congress is broken, okay? There are thieves in Congress. Most of the people in Congress are either inept or corrupt, or they get bought off and paid for by whichever special interest group. And Congress is the ones who should be doing about it. Meanwhile, President Trump, and this worries me because whoever comes after Trump is going to have even more power for executive orders. And this started before Trump, but it's just snowballing at this point. And so Trump now is implementing tariffs without congressional approval, which I don't like either. And it looks like that he's attempting to... Someone called this a poker play here with getting Mexico to help, but I would just say it's a leverage play. So he's economically trying to hurt Mexico into helping the U.S. with their southern border crisis. We'll see if it works out. We'll see if it doesn't. I'm not optimistic it will work out, but we'll see. So the stock market has not been doing well. And a lot of it's because of the market is worried about the trade war with China escalating and these new tariffs. These new tariffs just announced on Friday with Mexico. And what the stock market, they can't pump it as easily anymore. It's not a couple Trump tweets. It's not the talking heads bringing out unicorn IPOs that are going to be doing very, very well anymore. So the stock market is really starting to roll over at this point, and the technicals are not in the stock market's favor. So Jeff Gundlach has talked about this, the Bond King. He's manages many billions of dollars. He's a billionaire. And he's been talking about how basically, in his opinion, since January of 2018, if you go and look at the charts for the major stock market indices, and I'll pull up some charts really quick. So whether it's the Dow Jones Industrial Average, DJIA, basically the chart on that, the chart topped twice in January 2018, and then also it got as high again in September 17th, 2018, and it's been fighting since. So there's been bear market rallies in stocks, attempt to get the Dow back above 26,700-ish, but it's failed. So there's been higher lows. There's been higher lows on each bear market rally. So one of my sources from China, he just brought this up today. He has a theory. His theory is that potentially Trump may actually want the stock market to have a correction. Why? Because the Federal Reserve, he wants the Federal Reserve to do the 2 rate cuts. Now, the 2 rate cuts are basically already being priced in. The bond market here in the U.S. is already pricing them in now. It expects the rate cuts. And let me look up the 10-year Treasury right now, the yield on it. The 10-year bond is down a lot. It's gone down a lot. I think about last week it was at 2.38-ish, and now it's down to 2.14. So it's already starting to price these things in. Gold and silver have rallied, well, especially gold. Gold's rallied a lot, silver only a little bit. And the dollar index is still stuck. It has not been able to stay above 98, but I'm not saying that the dollar rally is over. It just has not been able to get above 98. But there's a global debt crisis, but the bond markets globally in so many countries now are inverted. And I think that this is intentional. This is central bankers implementing some of the last final stages of financial repression before negative interest rates in many more countries potentially, where they're trying to invert the yield curve so they don't have to pay interest on a growing national debt. Why? Because the Treasury departments for these governments cannot afford higher interest payments. They know if they tax the people too much with more taxes and layer them on too much too quickly, you will potentially either collapse the real economy or you get pitchforks protests like the Yellow Vests in France. And that's why we're seeing the problems in the European Union first, because European Union has had worse economics for a long time. The European banks are in bad shape, which I will talk about. And the standard of living in Europe is even worse. There's been a lot of taxes layered on in Europe, whether it's gas tax or the environmental tax and all these things. And the people in the European Union have basically said, especially in France, enough. They can't take any more taxes. Yeah, Briggs brings up it's a perfect storm of things. Yeah, you have a perfect storm of things. So the people who are saying that this is a fake trade war and that this is a banker cover-up, it's BS, because I can tell you the bankers do not want high tariffs. Gary Cohen, when he was Trump's economic advisor, and he's a big banker, Mr. Goldman Sachs, I don't know if he was CEO. He was like the second in command at Goldman Sachs, I think, behind Lloyd Blankfein for many years. Remember, he went to Trump's desk and he tore up a plan to increase tariffs on South Korea. So he was hiding. He hated the stuff Trump was doing. He was a never Trumper. It's funny why Trump brought him in. The whole the stories of why he was brought in and him being in there, all the crazy sabotage he was doing is just really hilarious if you want to read some of the stories. But he was a never Trumper. He hated Trump's idea of tariffs. I can tell you that corporate CEOs and Wall Street people do not want tariffs. The mainstream financial media does not want tariffs. Okay, it's the people, a lot of the people on the street who, like the loyal there's a lot of patriotic American farmers, and Trump has offered, I think, around $20 billion in bailouts and subsidies to soybean farmers and other farmers because of the trade war escalating and how China's canceling orders. And a lot of the farmers, not all of them, but a lot of them are very patriotic, and they told President Trump they don't want the bailout, they don't want a handout. They want a fair playing field, and they want to, raise themselves up by their own bootstraps. Now, that's a old-fashioned, I respect that a lot, but in today's America, I was just discussing this with my best friend at dinner, that is not looked at the same anymore, because now today's America is all about, a lot of it is about, what can I extract now, rent-seeking, what payments, or how can I trick you into paying for this, or what can I take from you, what can I extract from you. Even dating is like that. Which is like the rich. I matched with this rich champagne socialist on a dating app for all of a week or two, and she worked at one of those NGOs I found out that was going down to Guatemala and stuff. This was 8 months ago or a year ago, something like that. And she was I couldn't stand her. And then she just kept repeating before I got rid of her how much she hated capitalism, and yet you looked at all of her pictures on her dating app, and it was all expensive stuff, and her traveling, and her drinking champagne at charity events, and all this other stuff. It was just enormous hypocrisy. And this is the ruling class, the economic and political elites. They want to drink champagne, and they've already made their money, or they have their political power to get more money, and then they just want to talk about socialism. And this is why so many Western rich champagne socialists love China. Okay, so let me check my notes. Oh, I'm going to look at some more technical analysis. But the stock market, barring the Federal Reserve coming in here with the rate cuts and QE program, the stock market is definitely topping. There are a lot of signs in the different stock market indices that we do have a bear market. On top of this, I looked at the different stock market indices, whether it's the S&P 500 or the Dow Jones. They are topping. They've topped a long time ago, and they're going down. It's bear market rallies now. So it's definitely a bear market. Basically, the Fed's going to have to do something, because these corporate earnings that are going to come out, maybe they beat on earnings, but they're not going to beat on revenues. And you know what? Their guidance and their costs are not going to be as good, because you have more inflation with the tariffs and other higher input costs coming into the value chain, into their supply chains. And they're not going to be able to pass on all the higher costs to their customers. So there's going to be disappointments from the corporate earnings coming in the quarters to come because of the trade war. You already have these corporate CEOs coming out and blaming problems on the trade war. And like I said with the Del Monte live stream show a few days ago, I think it was a few days ago, I've done so many of these shows lately, that the Del Monte CEO was being honest about all his input costs going up and the consumer is going to have to deal with more inflation. But you have all these CEOs stupidly blaming the trade war for all their problems. So unless something very impactful, most likely the Fed, like I have in the economic cartoon, unless the Fed does a big reversal, implements QE, which is what Trump wants. Trump wants rate cuts, at least 2 rate cuts. He's mentioned 4. So 4 25 basis point rate cuts down to, so 1% rate cuts, and then QE. So we'll see if Trump gets it. He's trying to bully his way to it. but he has things set up now at this point where he can at least blame the Fed for some of the stuff going into the 2020 elections if things don't work out. The European bank stocks are something else that I wanted to talk about. Oh, so that I have the Dow, I have the Dow Global ETF DGT, Dave Grant Thomas up, and that's also looks like a bear market to me. I have a 2-year chart up, and that chart more than the other Dow Jones index that I talked about, the DJI, that chart definitely topped on January 22nd, 2018. And it's not gone anywhere close. It's had lower high rallies. So there's been bear market rallies. There's been a couple of them, and it's just going down. So there would have to be something major to reverse that. Okay, so let me talk now about European bank stocks. Everyone has brought up Deutsche Bank. The Deutsche Bank shares are down enormously. I'm actually shocked that they still haven't been wiped out already and restructured. There's been enormous efforts behind the scenes, according to my sources, keeping Deutsche Bank from collapsing already. I think it will eventually collapse. I think the equity in Deutsche Bank will be totally wiped out. I think the derivatives positions will be what's the right word? Made whole. Or at least there will be some type of backstop from the central banks, most likely with currency swaps. But the equity in Deutsche Bank shares, I don't think they have really any equity. So this thing's going to keep going lower. It's down enormously over the last 5 years. 5 years ago, it was at $38 a share in June 2014. So it's down to just under $7 a share at $6.77. On the New York Stock Exchange. So it's down a lot. And there's been manipulation rallies along the way if you look at the chart. There's been a couple attempts to manipulate it, a couple really big attempts over almost an entire year span. So the manipulation attempts, there was Deutsche Bank almost collapsed at the beginning of January 2015. And then there was a big rally in the shares, and that sputtered out, and then it collapsed again. And then there was an attempt to manipulate it back up again in 2016, and that lasted, it dropped down again, and then it rallied a while until, let's see here, January 22nd, 2018, and that was basically at just under $20, $19.51, that was basically it. It's had almost no rallies since then. So I don't know how Germany plans to do a restructuring. It looks like they're not going to be able to merge it with Commerzbank. But the main problem with Deutsche Bank is the counterparty risk to other banks, and also their over-the-counter derivatives positions, which are way larger than Deutsche Bank can cover. Multiple orders of magnitude. And to add to the argument here about how bad European banks are doing, let me pull up a stock chart of Societe Generale. They're on the Paris Stock Exchange. I thought they used to be listed on an American stock exchange, but they're only, I guess, on the Paris one. They're GLE on the Paris one. And the 5-year chart for them, I mean, it's been a roller coaster. It's been a big roller coaster. They had a big rally going into 2016. And then by the end of... This stupid Bloomberg chart doesn't work that well on the website. But they've been sputtering, going down. And the latest chart price on SocGen is in April. It just has totally collapsed. So this thing, I don't think it's going to go to zero per se yet, but it's going to go a lot lower. So the European and Societe Generale is considered by many people the best of the bunch of the European banks, even though the European banks are really, really bad. They have much worse balance sheets than the U.S. banks, and they were never recapitalized to the level that the U.S. banks were. So the European banks are one of the major crisis points. Besides the U.S. corporate bond market, the European banks and European government bonds are a big, big crisis. I would call them economic landmines. So comment if you think that Jeff Gonlock is right, that we are now in a bear market in U.S. stocks, or what do you think could potentially change the bear market to reverse it, maybe do a 180 into rally. And we're at the stage, and I've talked about this at length as well, where we're at the law of diminishing returns. So each QE program, even if it's larger, each quantitative easing program is going to get less bang for the buck. It's going to, even if it's QE to infinity, it may cause less of a stock market rally because people are going to be looking at, well, the companies are not making as much money. Well, with the tariffs, their margins are not as good. We still have a trade war. So people are going to be looking at all these different factors and saying it's not as much of a no-brainer to just, oh, stocks are going to go up for the next couple months, and that's all I care about. So do you think then that Trump intentionally wants a bear market in U.S. stocks to get his rate cuts in QE? I think that's a very important question. It's an interesting theory. That would temporarily hurt U.S. tax revenues, though. There would be less capital gains taxes because most people are long, especially the index funds. And I think also a lot of managed money, these are professional money managers, and these are either hedge fund guys or trend traders. And a lot of them were educated with Keynesian economics. And when they see global economic problems, they still think the U.S. is a safe haven, and that's why they're probably going into U.S. bonds. So besides the market pricing in rate cuts, there's also a lot of managed money outside the United States that's coming into the Treasury market for safe haven status. But overall, I think a lot of these major central banks and also the Treasury departments, they want an inverted yield curve. Remember, I talked about this 6 months ago about that Lil Brainerd, who wants to be chairman of the Fed and also U.S. Treasury Secretary. She's very politically ambitious. She was leaking a lot of honesty there with her opinion, saying the Fed didn't care if it inverted the yield curve, and look what's happened. And this goes back to financial repression. This is taking the ability for savers to make a living off their capital. To just, in the past, people could have just put money into treasuries and they could have made their 5 or 6% and it would have been risk-free return. Well, technically risk-free because the treasury had a high credit rating and you would get 5% nominal returns on your treasuries. Those days are gone. The governments cannot pay those interest payments, which is why they're doing financial repression and trying to flatten out the yield curve and manipulate interest rates. Now, ZIRP, in theory, these Keynesian academics want negative interest rates too, and that's dangerous because Europe has been doing negative interest rates and they have not been doing well with them. The banks have been making more profits, but the European economy is doing very, very bad with negative interest rates. The real people. The businesses, the real people. And the people who are saying that the trade war stuff is fake, okay, there's a lot of small businesses. There's a lot of people that are going to be hurt with the tariffs. The consumers getting hurt with tariffs. There's a lot of people on both sides in China, in the United States. There's going to be a lot of collateral damage. So to say that this whole trade war is fake, I totally disagree with it. Sounds like another dumb conspiracy theory, like a lot of the stuff that people were saying that QAnon was coming up with and they believed it. There's a lot of people, unfortunately, in the gold community that have not been called to account, that have had just bad conspiracy theory after bad conspiracy theory for over a decade. I won't name any names, but I do respect Gerald Celente. I think he's a smart guy, but he doesn't know anything about economics, very little. He's a political trends analyst. He looks at technology stories. What is he doing talking about investing? What is he doing talking about... What's he doing talking about economics? Sorry, I got a little allergies. Yeah, Kirsten, this is definitely not the best economy ever. So, this is not financial advice. I did do some research for you guys, just my opinion, and you should do additional due diligence, how to play the tariffs. So I think China still has to buy a lot of food. They cannot grow all of their own food because, number one, they don't have a lot of arable land. I think it's less than 20% of all their total land is arable, and they have so much pollution problems in the air, water, and soil. that they cannot grow all of their own food. So they have to import soybeans. They have to import wheat. They have to import a bunch of different things like dairy products and beef and seafood and these things. So I've been looking for where this other food that gets imported to China, where it could be grown. And I think Brazil is probably one of the best locations for where this food, if the Chinese have decided that they're not going to buy American soybeans at all, they're totally cutting off all their orders of American soybeans. So I think Brazil stands to benefit the most. So I did a look, some research, and again, not financial advice, do your own due diligence, but I think I found you guys 3 good companies you should definitely take a look at that have a lot of potential. Now, before I mention the company names and talk about them, let me just say that in general, agricultural companies, they may generate a lot of revenue, but their businesses are very capital intensive, and they do not traditionally generate a lot of free cash flow because they have a lot of capex. They have a lot of capital expenditures. So these businesses are not high profit margin, high free cash flow businesses with low capex. So these may be good for a short or medium term trade. They could potentially go up a lot in share price, but over holding these businesses over the long term, these businesses have to deal with a lot of things, including a lot of capex, and also potentially, if they're in countries like Argentina or Brazil, a lot of corruption. So here we go. I found this company called Cresud, C-R-E-S-U-D. They are listed on the NASDAQ under symbol CRESY. So Chris, Robert, Eric, Sam, Y as in yarn. There we go. Yarn. It's after midnight, a little tired. So Y is in yarn. They have, stock price now is just under $10 a share. They have pretty impressive metrics here that look for risk reward. They have earnings per share of over $5 earnings per share. They have a PE ratio below 2. The stock price has not done a whole bunch. And I think that is because they do not generate an enormous amount of earnings with their revenues. They have a lot of revenues, but not a lot of earnings. And this is a problem in general with the agricultural business. It's very capital intensive. However, if China now says that we're not buying any American soybeans, and they go to a company like Cresud and say, we're going to double or triple our orders and we'll pay more money to lock in supply, then all of a sudden they could have more profit margin. So there is one investment bank analyst that has a much higher stock price target. He has almost $22 a share stock price target on Cresud. And Cresud owns a lot of agriculture businesses for planting, harvesting, and sale of crops such as wheat, corn, soybean, cotton, sunflower, sugarcane in Brazil. They also own some cattle and slaughterhouses. So they have a diversified portfolio of agriculture. The company is headquartered in Argentina, so they have some farms in Argentina and also in Brazil. Brazil has a lot of ample farmland, and Brazil should be able to handle crop increases if China totally cuts off the U.S. and starts buying in Brazil. Another company so Cresud, from a risk reward, the company doesn't look like potentially any bankruptcy or anything like that. It looks like it's a halfway decent risk reward without doing a ton of due diligence on it right now. It would require obviously more due diligence if you're going to put more capital in. Another company is Bunge, B-U-N-G-E Limited, symbol BG, Brian Gary. So this stock is also down a lot. I believe it's close to the 52-week low. Yeah, its 52-week low was $47 a share, and it's at $52 a share. So it's not much higher than its 52-week low. They have earnings per share at over $2 at $2.11. The PE ratio seems okay at around 24, just under 25. So 24 and change. And they pay a dividend. The dividend is actually pretty good. It's almost 4%. So again, the problem with them, like I said, is an agricultural business problem in general. And they have a lot of revenues, but not that much earnings. But if China starts giving them a bunch of orders, they have a bunch of... I have the website up for Bunge right now, and they have an enormous amount of locations and farms in Brazil. So they do have locations in the U.S. However, they also have geographical diversification, and they have a lot of locations in Brazil. So their American business may get hurt, but their Brazilian business could take off like gangbusters. And this company is generating a lot of revenue right now, although, like I said, the agricultural business in general does not consistently generate free cash flow. There is some agriculture real estate investment trusts, but I don't think they're listed on an exchange. If they are, they're fairly new. There was one that Sprott was promoting like 2 years ago. I'm not sure if they're on an exchange yet. It might have been a private placement. So Bunge looks interesting as well. Another company, this is also Brazilian. This is, I'm not sure which stock. Okay, it is a Brazilian company. It is called JBS-SA. It's a Brazilian company that is the largest by sales meat processing company in the world, producing beef, chicken, pork, also selling byproducts for the meats, headquartered in Sao Paulo. And company has 150 industrial plants around the world. And JNF Investimentos is 42% indirect shareholder. So I'll attach a link to it if you want to read more about it. I believe you have to go, if you want a liquid shares to buy those, I think they pay dividend too. There are liquid shares to buy those. You have to go on a Brazilian stock exchange. I don't think they are listed on an American stock exchange. But they could stand because they have so much direct exposure in Brazil. I think the Chinese could definitely give them a lot more business. So those are the three agricultural companies. You have Cresud, which is Argentinian and Brazilian. You have Bunge, which is American and Brazilian. And you have JBS-SA. And I'll attach links to all those if you want to do more research on your own. Like I said, the agricultural business in general, though, these are not great businesses. They're not high margin, low capex, consistently free cash flow generating businesses that can grow free cash flow, grow revenues, grow earnings. That's not the agriculture business. In fact, if you find an agriculture business like that, shoot me an email because I don't think they exist. There was one company trying to start an agricultural royalty company. I'm not sure. I know they were launching it a couple years ago. I'm not sure how much success they had with it. I know Sprott was promoting that too. So Sprott was promoting like an agricultural real estate investment trust for farmland and then a agricultural royalty company. And I'm not sure if either one was successful. Now, in theory, they both sounded pretty good, especially the agricultural royalty company. But just because something sounds good and someone has a good business plan, it's an entirely different thing to execute it well. And finally, the gold miners. Our poor gold miners. And the more I study and learn about the gold mining industry, and I've studied the gold mining industry for a decade now, the more I think that most of the CEOs in the mining industry are either totally incompetent or lying and corrupt. So the gold mining stocks have rallied. The gold price is up over $1,300. I am going to go ahead and trade the gold miners. You might make a pretty good buck on this rally if this continues. But I'm going to issue a blanket warning, and you need to look for this, and Nolan Watson talked about this, and I don't think most people realize it, but if the gold price in US dollars gets to $1,400 or higher, a lot of these producing miners and producing gold miners and producing silver miners, they could not raise any money in the last 6 to 12 months. They could not raise enough equity capital. They want to. So guess what's going to happen when the gold price gets back to $1,400, $1,450, $1,500? You're going to see, now not every miner is going to do this, but you're going to see, especially the ones where the CEO is just like a manager type and not independently wealthy, and he wants to keep his job, so he keeps his high salary and stock options and stuff. And this is the problem the Hecla Mining CEO got into, that every time there's a rally in metals prices, the miners have such bad balance sheets, so many financial problems, you're going to see a lot of the miners raise more equity, dilute, sell more shares. So that will start to slow down the rally in a lot of these mining shares. You can make a lot of money on this rally for gold miners. I'm just telling you to beware. There will be, if the gold price goes $1,400 or higher in US dollars, there will be a lot of gold miners that will go to the market and issue massive equity dilution. So prepare yourselves for that. So if you, there's not financial advice, but if you have big trades on for the short term, for the next month or two, and you get that big pop, You may want to look at the balance sheet of the miner if you know how to read it and take some money off the table. Because if the miner does a big share dilution, some of the shares are going to have a big correction after that. Unless gold price starts going like really crazy gangbusters high like in 2009 and 2010. You want to know if DC is a sausage fest? DC is not a sausage fest. There's actually a lot of women here. A lot of the women here actually, like, they act like men, though. A lot of the, especially the women, like, right at either in college who come back here for summer break or internships, or right out of college, a lot of them have, like, are rotating, like, multiple guys. So some of them, I used to know this one girl, and she was bragging about it. I don't know why, but she was bragging how she would have like 7 different guys in her stable of rotation, and she was having a different guy every night just to stay away from boredom. And she was doing this like every week. And that's the new normal here, unfortunately, in a lot of instances. Good luck, Ryan. If you're not in the DC metro area, you should do well. Okay, I'm taking a look at listener questions and comments. The Fed, Russian bot says the Fed has found their scapegoat. So Trump and the tariffs. The Fed hardly gets any blame anyway. Only financial professionals and people who know Austrian school economics and libertarians blame the Fed. Most people, most Americans do not even know what the Federal Reserve is, what it does. They should, but they don't. Too busy staring at Instagram pictures, even girls. I see girls on Instagram more than men. It's the girls that are looking up like bathing suit pictures and Kim Kardashian and stuff on Instagram. I see them at bars. When I used to go out to bars the last like year or two, I used to see girls wasting all their time on, they would be out and they would take 2 hours to get ready or whatever, go out to a bar in a nice pretty dress, and they wouldn't want to talk to anyone. They'd be too busy looking at Instagram on their phones. This is the weird culture we have now here in the US. What type of bird or animal is that in the picture? So that is a bull for a bull market knocking on the door of the Fed because there's bulls coming with torches and pitchforks. It's actually hilarious. It's actually very apropos because you have the mainstream financial media trying to spin that there's still a stock bull market. And then you have the actual evidence of the charts and the financials, the bank stocks, the European bank stocks especially, and a lot of the corporations, the majority of companies in the indices are not doing well. And so a lot of the real world evidence is showing that there is a bear market. So basically the stock market bulls, the people who are professional money managers, very short-term oriented, because what's considered a long-term investor now is not really a long-term investor anymore. What's considered like a long-term investor now is probably all of like a couple months, maybe the end of the year, 6 months or a year at most. That's what's considered a long-term investor now. Samuel asks, will mortgage rates go up in Canada? Should someone buy a house now or wait? I would wait. I think that Canada's, especially if you live in the greater Toronto area or the Vancouver area, I think there's going to be a big housing crisis. The data I'm seeing from Toronto, first of all, the guy who shorted in The Big Short, one of the guys featured in the movie and the book, he's heavily short Canadian banks, and he's betting on a big bust in Canadian real estate. But the credit card debt, the mortgage debt, the home equity lines of credit, the second mortgages in Canada are all sky high, especially in the two major cities of Vancouver and Greater Toronto area. So that's not sustainable. I don't know the exact time frame on that, but if I could wait, if I was in Canada and I was looking to buy a house, I would wait. That would be just me. Not financial advice, but I would wait. Will currency become worthless in a new system? There will have to be a new type of financial system in the future, Samuel. We don't know what's going to be like. And that's why you can't make big bets on only one thing. So that's why you can't put all of your money into just gold, or all of your money into just rental properties, or all of your money into just Bitcoin. You have to have some cash in case there's an opportunity. But the way things are set up now with the governments and central banks, they want to devalue your cash. They want to force you through Keynesian economics and the other BS that the central bankers and politicians have. They want to force you to spend that money because having savings is considered bad in Keynesian economics. And deflation is considered bad. Politicians cannot tax deflation. That's why they hate it. And it looks like taxes are going to be going up across the board on a lot of things, whether you're in Europe or the United States or many other places. Pablo says Trump is going to tariff the Fed. Yeah, I doubt that. The Fed technically pays back all of its profits at the end of the year to the Treasury anyway. So he's not going to tariff the Fed. Trump, I already talked about this weeks ago, that Trump, through his commercial real estate development, he's always been a go big or go home type of person. So when he can, if the bankers give him low enough interest rates and enough credit, he borrows to the hilt. And even if when he goes bankrupt, he tries not to pay people back. So I think that's the type of economy Trump wants. The best economy in 85 years. What about the 80s, man, with Ronald Reagan? Those were statistically far better. The 80s were far better. The 90s were better. Definitely not the best economy in 85 years. Oh, we definitely have a troll here. Negative interest rates forces hoarders to consume. That is what our economy needs. Yeah, and Keynes wanted to euthanize the rentier too. So Keynes wanted a panel of intelligentsia bureaucrats with multiple degrees to be in charge of all the country's savings and just allocate. But central planning does not work. You have a case where the Chinese have put in a ton of infrastructure, and in the short term it looks good. Oh, they built all this infrastructure. Oh, now they have a housing bubble. In only 10 years, they created an extra $50 trillion of credit. That mathematically cannot be paid back. So yes, China has all this nice infrastructure, but they went crazy with all the credit. And I just finished China's Great Wall of Debt, and I highly recommend the book. It's really good. There was stuff in there about China I definitely did not know, and I learned a lot. And I think I know a good amount about China, considering the sources I have and in the other books I read about China. Oh my god, this is hilarious. Trump should appoint Mario Draghi to the Fed after he leaves the ECB. Mr. Whatever it takes. Mr. QE is not allowed, so we'll just change the rules. Mario Draghi. I don't know when we'll see a rate cut. I honestly don't care at this point. The short-term stuff I don't care. I don't care about the short-term stuff. If you have cash and you have the right gold stocks and you have some exposure to Bitcoin and maybe you have some rental properties outside of the stock market, if you're more sophisticated, you can do hedging trades with puts and calls with options using fundamental research and then using the options for the leverage, and you can make some money on trades. I would have made a killing on my Tilray research, but I didn't have money to buy a bunch of puts. I would have bought them way out of the money. And that trade played out well. It just took months for it to play out. Because remember, I talked about Tilray. I covered it extensively. I read through the annual report on a show for you guys in August of 2018. And it took like 4 to 6 months for it to start to play out. But finally, it really started to roll downhill. Stan says we should cut off China from SWIFT. Well, wasn't Russia already cut off from SWIFT, and that didn't collapse Russia's economy? No, 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 no. I don't want to see any foreign policy intervention. Let's arm the Ukrainians to take back Crimea. There's a lot of Russians in that area. There's a lot of Ukrainians who side with Russia. That area used to be Russia. Full Russia. It's more complicated than that. And anyway, foreign policy intervention, when the U.S. does it, it doesn't work. Normally there's blowback and a lot of other problems. And especially the U.S. doing it in the Middle East, it's definitely increased terrorism. Okay, we got a lot of geopolitical discussion in the comment section. I think I covered, let me check my notes. I think we covered pretty much everything. I'll take a look at the stories that I have up to see if I covered everything. I'll attach the links in the information section if I didn't cover something, but I think I pretty much got everything. But the bottom line is, with the tariffs increasing, tit for tat, China versus the U.S. escalating, these are not tailwinds for the U.S. stocks. So what's going to be the new tailwind? What's going to reverse things 180? Probably the Fed, considering that's what's been the driver of stocks for many years. When will it happen? I don't know. We'll see. Trump wants it immediately. But these inverted yield curves and negative interest rates, if they get implemented more than just in Europe, these are broke governments trying, because they don't want to pay interest payments on debt, higher interest payments on debt, and then they're trying to get more money for the banks. But they're just pissing more people off. They're literally taking money away from savers, from retirees. And people are not getting that much money for Social Security and pensions. Those things are severely underfunded. So it's a dramatic problem. They're in, basically, the central banks and the governments, because of what they did in the last 10 years after the 2008 financial crisis, they've backed themselves into a corner, and they're in a no-win, bad situation. It's almost 1 a.m. I can use situation twice and make it sound interesting. Okay, well, there's a ton of other comments, and I'm sure more people will post them underneath the show after it's over. Thanks for listening. I know it's late for some of you guys. For European listeners, this is like early Saturday morning, right? But thanks for the show, and I will work on getting that interview rescheduled. But, you know, unless the Fed does something, because I don't see the trade war with the U.S. and China going away anytime soon, and it looks like things are going to get even worse with rare earths, and also with American farmers for soybeans, that unless the Fed does something soon, there's not going to be any type of catalyst, any type of tailwind for U.S. stock markets to get out of the bear market that they look like they're in. The charts are just looking very, very bad lately, with lower highs and bear market rallies that sputter out since basically January of 2018. I think Jeff Gundlach is correct. So comment after the video if you agree with Jeff Gundlach, but I think he's right on this one, unless the Fed does reverse, because I don't see any other thing large enough to reverse a trend that's this big, that's looking like a bear market in stocks. So I think it would take the Fed doing rate cuts and QE at this point. Okay, bye for now, everyone. Have a nice rest of your weekend.